I think this is our third session of the fall speaker series. My name is Anita O'Brien. I am the on-farm program lead for Ontario Sheep Farmers, and I'm going to be your host for this evening. Tonight we have with us Steve Duff from OMAFRA. Steve is chief economist. Some of you will have met him at the 2019 AGM. We had Steve do a presentation there on the market situation. And we also had Steve do a similar presentation last year in this online format. So just a bit of housekeeping before I hand over to Steve. We will take questions during Steve's presentation if it's a question for clarity, that there's something he said that you didn't quite understand. Raise your hand or type it in the chat box and we'll address it then. But sort of questions that were, maybe digging a little deeper into something or trying to analyze what's going on in the market, we're gonna leave those questions till the end. So that we can have a fulsome discussion there. So with that, Steve, welcome. Thank you for joining us this evening to do this presentation. And as Steve starts, please, someone just let me know in the chat box if there's an issue with audio. If it's good, don't type anything. If you're not hearing us well, please let us know. And with that, Steve, I'm going to turn my mic off and hand it over to you.
Great, thanks, Anita. Good evening, everyone. Welcome the opportunity to do this outlook for you tonight. As Anita said, I've had an opportunity to do this a few times over the last few years, and probably have some more opportunity over the next couple again to do that. So I'm going to go through a bit of a sheep and lamb situation and outlook, look at where we've been over the last year or so, and try to rationalize and think a little bit about where we may be going. If you've heard me present about markets in Canada, Ontario, one of the key drivers, and lamb and sheep are really no different, is that the U.S. drives the Canadian market. We're a price taker, as we often talk about it. We arbitrage to the US, which means that our prices can't get too far out of whack given transport and free trade and that kind of thing. And so we'll dive into that a bit, and the US information hopefully can be a bit of a guide for us. We'll talk about where things have been in Canada and Ontario, and then we'll do a little bit of an outlook, which is obviously always a challenging thing, and we'll talk a little bit about some of the factors that play in terms of that. So in terms of the US, again, like any major commodity, whether it's beef or hogs or grains, your production base, in this case, your ewe flock, is really, one of the main significant key drivers of where things have been. The US flock has pretty much been in steady decline since 2005. Now, again, in cattle and hogs, you do have a little bit of a cycle. Those cycles have gotten a fair bit flatter than they used to be due to a few things in particular, that the United States exports so much when it comes to beef and pork. In the case of lambs and lamb meat, because the US, like Canada, is such a significant importer, in particular from Australia and New Zealand, of a grass-based product, one of the major driving trends has been basically how the US industry sort of fits around that sort of constant flow of imports. And again, there's a lot of similarity what Canada and Ontario face. And so to a large degree, that's the driving force behind why the US flock has sort of continued downwards over time. Now, again, lamb and sheep are a lot more grazing based, certainly in the Canadian context, than some of our other sectors, and in the US as well. And so the competition for grazing land is an issue here in Ontario. It's an issue across the country. Can you still hear me okay, Anita?
Yes, you're coming through loud and clear, Steve.
Okay, good. Good. I just want to make sure I lost my screen showing your name, so I just want to make sure we were good. Okay, apologies. So the numbers have continued to decline. They're down about 2% in 2022. Looking at replacement lambs, again, an indication of what farms are doing in terms of their breeding perspectives, et cetera. They're down as well at about 2%, and I'll talk about some of those implications. The U.S. is, when it comes to meat production, grain production in particular, they've pretty much set themselves up to be in everything, for the most part, except for lamb, really, to be a major world exporter all across the board, whether it's in poultry, whether it's in beef and pork, grains, corn, soybeans, et cetera. And so for the most part, they've been at record levels of production over the last number of years. Pork and chicken production have risen 50% since 2000, so in like 20 years kind of thing, which is, considering the corn-based diet and the contained nature of chicken and pork production, is a really astounding thing, really, when you think about it. Lamb, on the other hand, is a sector in the United States, and this plays into the Canadian market a bit as well, that really hasn't sort of kept pace with that. And again, a lot of that has to do with the competitive situation that North American lamb production has relative to Australia and New Zealand. And so lamb production in 2022 is right now on track to be about 4% lower, at least in terms of US meat production of lamb, about 4%, and then it's forecasted to fall again into 2023. So again, the one nice thing about that from a Canadian perspective is that, with cattle, for example, where the market can be all over the place at times, where numbers are up, down, or otherwise, they have big price transmission impacts in terms of how it flows through to the Canadian market. In the case of lamb, because the US is sort of steadily declining, there is a certain degree of stability that can at times offer in terms of how prices can affect the Canadian market, and I'll cover that here in a second. What the US has faced in the last couple months, quarters or so, back into the summer, is, as they were expecting basically the lamb crop to sort of fall, they were anticipating through to the end of this year, flat, if not, again, slightly lower overall meat production in the lamb and mutton area. But what they experienced was a fairly significant, unforeseen in many cases, increase in imports. So you can see the third quarter here, which is the bottom row, that the US imported around 94 million pounds on a carcass weight basis of lamb and mutton, compared to 88 before. And if you go back to in the previous two quarters, if you go back into 2021, those were lower yet. 95 is what they're anticipating right now for the fourth quarter. Their trade numbers are up to date as to the end of October. And so, not unlike some of the challenges that Ontario at times will face, and if we see, and I'll talk about that later on, if we see large numbers of lambs coming out of Western Canada into Ontario, where all of a sudden the market isn't quite sure how to address that excess supply, those additional product, et cetera, the US hasn't really been able to sort of rationalize that production against those large increased amount of imports. And again, it's not a large number of businesses importing this volume of meat. It's a relatively small number of businesses. And so again, there's this flow of product into market channels that wouldn't otherwise be. And again, there's lots of examples in Canada where this happens at times. And so what it's had the impact has been is that basically it's driven down the choice lamb price out of Missouri, which tends to be the reference price in the US, through the third and into the fourth quarter in the United States, where you've seen a really big drop, over a 50% drop at times, week to week, in that lamb price. Now, the thing to remember about lambs relative to pretty much any other commodity, both in North America or in Canada, from a pricing point of view, is that they're, for the most part, the only ag commodity that's sold for slaughter in a live auction ring. If you look in the United States as an example, almost all of the cattle, or a very high portion of the cattle, are sold as direct treaty on contract to packers, which has long been an issue in the US in terms of price reporting. That's the case here in Canada. There's hardly any live trade out of Olex, for example, in St. Jacobs, as far as cattle going for direct slaughter. And so lamb, again, in the United States and in Canada, Ontario, that's a pretty unique thing. And what that does is that it sort of pushes that uncertainty in the market through a little bit more directly, because you're dealing with the auction marts trying to address those volume issues, and how that reflects in terms of buying and pricing, relative to if you were in a contract situation where there isn't sort of that direct response. You know, if you take Cargill and Guelph, for example, with beef cattle, you know, there's a bit of a delay there as to how people find out about what prices are being offered by Cargill, what people are taking, when they're planning to set delivery dates for their cattle, that kind of thing. And so that has a big impact. If you follow through 2023, the United States is suggesting that they're planning or being, assuming that they'll see a bit of a flattening of these imports. And again, the idea being that prices have come down, that increases the competitiveness of US lamb relative to New Zealand processed lamb, and that in turn is going to sort of push back some of those imports, and that they'll see more of a stabilization and maybe a rise in price towards the end of 2023. But again, not back to the 225, for example, or 250, 260 that you would have seen if you're back into 2021. They're talking 143 on average through the year. So again, even though they're seeing lower production overall in the United States, it's this flow of product in from New Zealand that's been an issue, and how that plays into it. So we'll kind of cover off what that might mean. Because lamb is a grazing-based industry, and there's a lot of lamb in the States in particular that is corn-fed, et cetera, as well. Looking at where the U.S. is from a drought perspective is significant, and it will affect all of the markets there and here in Canada. And so right now, the U.S., in terms of their corn growing areas, they're at about a 65 to 70% level of drought. Again, varying degrees of drought. One of the biggest impacts right now is that basically they're unsure about exactly how much winter wheat ended up being planted and is expected to be successful going into the spring thaw. And so that can have a big impact on grain markets. On top of that, about 69% are in the 70% area, so forth, of the cattle producing areas, which has a fair bit of overlap with the lamb grazing areas, is affected by drought. And again, the thing that's really kind of unique about the US relative to Canada is that because they have areas that are so heavily focused on grazing and so really don't maintain significant winter feed stocks, that when you have extended droughts, many of those areas will see significant liquidation in terms of the livestock. And so that would apply in lambs as well. So if you go back to 2012 through to 14, large parts of the US, down through the Texas Panhandle, et cetera, liquidated their livestock because they simply had no grazing base to feed those animals. And in turn, it drove a lot of meat into the market in a way that really wouldn't have been coming through for a number of months or maybe almost a year in some cases, compared to that circumstance. And that had a big impact on prices, et cetera. And so the situation in the US could have a number of different perspectives as well. Seeing what's going on in the US, hay prices have went up quite a bit. That's having a big impact in terms of exports, and then some of those more northern parts of the United States in terms of feeding livestock over the winter. In terms of where the US sees their crop production going from the 2022 crop year, that's the year that we're in now. So again, the way crop years for corn, soybeans, wheat, oats, et cetera, work is basically the crop year starts when the crop is harvested, and you have a year basically from that point from a marketing perspective. And so in Canada, for corn or soybeans, as an example, the crop year goes from October 1st, in this case of 2022, all the way through to 2023. And so with the crop off, we have this time that we have to sort of figure out what we're going to do with it. It was basically record or near record production for corn or beans in 2021. So the US, after that record production, has had a year of sort of wrestling with, what were some pretty large volumes. The challenge is the demand has been so high that they've seen some significant variations, volatility, trying to rationalize the market, trying to get, supply and demand balance against each other. And where they're at right now, basically from a corn, soybeans, and wheat perspective, is what we call the stocks to use ratio. So how much inventory is there relative to how much use we're going to have over a period of time, is at or near almost historical lows. And that basically means, if you think about the idea of a barn full of hay, how long can I feed? How long is it going to take me to use up that hay? How many days of feed do I have sitting in that barn? And right now we're at a record low, or very close to a record low, for those three main commodities, which drive a lot of our sector in Ontario. And so that basically means higher prices, at some level over the course of this marketing year, but it more likely means volatility. Every little turn, every time the crop reports suggest there's, planting delays, or every time there's, extended periods of dry weather, or there's really wet weather in the spring, all those types of things that farmers experience, they're going to add volatility to the corn price as the year goes on. The crop year planted in the spring, the U.S. will say what they think is going to happen around the 31st of March. That'll play out July 1st or so. They provide their actual numbers. The likely scenario is we see a bit more corn, a bit more wheat, and about the same, if not maybe down a little bit from a soybean point of view. But again, a lot of that hinges on where we see the drought going. In terms of where prices go, again, corn's at and soybeans are, we're in this sort of almost new world of really high prices. I remember early on in my career, $2 corn, we're not anywhere near that, and we won't be for a long time. So if you're feeding corn, I think the anticipation should be that, we're going to be continuing to see some high prices for a considerable period of time. We may see some flattening. We may see prices come down a bit. There'll be some volatility. So if you're buying, there's opportunities to price hedge, that kind of thing. But, prices are going to stay strong for a considerable period. So looking at the Canadian market, obviously there's been a lot of talk about food prices. Food prices, again, are a complicated situation. If you have any interest in where the grocery and how the grocery industry works, there's information online right now through the Standing Ag Committee, who's questioning a number of the grocery store executives about food prices. And the idea of how food prices pass back to farmers and that kind of thing is a complicated thing. One of the interesting things I think about Canadian food prices is that for a large part of the time since COVID started, so since going back to February 2020, and I've been saying this and I've observed it, analyzed it, that kind of thing. My perspective would be that, we have a really concentrated retail sector that can be bad in certain circumstances, but there's some benefits in others, and that is in buying power. And I think to a large degree, they've generally kept prices lower than maybe they might have otherwise been for quite a while during COVID. And I think that as people, the media, the general population started talking more over the last 8 months or so about inflation, prices are almost psychological in some sectors. People expected prices to rise, and in some sectors, including food and including the industries that supply product through to the grocery stores, I think gradually started thinking, well, we can pass on higher prices. Now people expect it, they're more accepting of it, they're not going to reduce their demand because prices have risen, et cetera. And so that has occurred. Will there be some rationalization of prices over the next little while? I think so. But, I think that it's likely that we continue to see price levels, flat, if not just slightly increasing over the next year. And that's going to play into a number of things in terms of how both government and people react to that. The thing I think that's important, and this is a big thing I think when you think about pricing land as well, is that, the majority of food in Canada is very much internationally driven. We are not a price taker like the US, right? So, the US does have a fair bit of control in one way, shape, or form over its own destiny when it comes to food prices. In the Canadian context, we don't have as much, right? My estimate is that about 81% of our expenditure as consumers in food stores, so, buying the stuff that you would consume at home, lamb would be part of that, that's internationally price driven, about 81%. Fruits and vegetables are in the neighborhood of 27%. Supply management, yes, we have price control, etc. That's only about 19% of our food purchased. But if you go through sort of the detail of supply management, in particular on the poultry side, every quota period, those quote prices for turkey, eggs, chicken are adjusted based on cost of production of what's been expected over that coming quota period. And that is directly affected by the price of corn, soybean meal, et cetera. And so there's, significant volatility that gets baked into the industry in that regard. Where have lamb prices been? Lamb is a little bit more complicated to track because it isn't always 100% available depending on the store. And so this is, I think, one of the things I know that some of you attending tonight are taking some of the business management courses that Anita and the sheep farmers are offering. And, the one thing I would mention is, especially in an industry like lamb where, a lot of people get into direct-to-consumer trade. I do a lot of beef that way. One of the things I think that becomes important is how you track prices. So in the case of lamb, as a ministry, we will track retail prices from a variety of different grocery store chains. We do it usually every other week, sometimes once a month. The thing that's interesting about lamb is sometimes you'll see prices available from different stores. Sometimes they'll have Ontario product, sometimes they'll have New Zealand or Australia product, etc. But it gives you a reference point. So if you're doing this as an individual producer and you're wanting to understand the local market for you, that's where, trying to track information for your own records, for your own purpose at stores in your local area, whether it's a farmer's market that sells some lamb, a competitor, whether it's the local food land, those types of things can all provide a reference price. And certainly when it comes to lamb on the retail side, there's a fair bit of, sort of hand bombing, I guess, that you might have to do in that context. What we've seen with Ontario Fresh Lamb is that over the last 2 years, so going back to the start of 2020, it's averaged about $12 per kilogram higher than Australian Fresh or $7 higher than New Zealand frozen. So again, those are kind of the three references that we look at. It's kind of complicated. Again, the price, especially on the Ontario side, doesn't vary a lot at some of the retailers. There's obviously sort of a consistent marketing plan they have relative to their customer base. I think for the most part, it's based on specific volumes that they're acquiring through provincial plants, and they're trying to meet that local demand. And so they're not, adjusting the price a ton. And so you're not seeing it vary, as you see some of the farm level prices change. Again, in the United States, the nature of how they have access to price data across the board is quite a bit more robust than here in Canada. Normally what they would do is they do what's called a marketing margin. So they'd say, well, the price of lamb at the farm level is this, the wholesale price of cut lamb is this, and the price of, bone out lamb, that kind of thing at the retail level is this, and you can create a margin between them and sort of understand those relationships. We don't really have access to that same kind of information. What we do have in Canada is some indexes, so that we're more about tracking the variation than the actual level of lamb over time. And so that's basically the black line at the retail level. And the one thing you can clearly see is that the farm level price, not unsuspecting, is a lot more volatile. The retail price is actually extremely stable, which again, I think is a function of the nature of how retailers see the demand for this product. And so, there, I think, are some interesting things that, somebody who wants to participate in the sector can sort of take from that, right? That, it's really then a function of people have a set base demand for Ontario lamb, likely due to quality, likely due to freshness, likely due to the fact that it's local, and that gives them the ability to sort of market that product through those periods in a way that, I'm assuming the grocery stores have a decent margin built into that. And I think that's one of the things, again, as a producer, if you're looking at this from a business point of view, and I know that reflects in how I price the beef that we sell from our farm, that you can take a lot from that kind of thing. Meat demand, again, is a complicated one because you're always thinking about sort of two things. How are consumers responding to prices? How are they responding to, what's out there from a substitute point of view? And that's where, when we talk about demand, we talk about per capita consumption. So, when the price goes way up, per capita consumption will fall because people substitute other things. And in the protein world, there are a fair number of substitutes. The challenge is that the demand for lean protein has been growing, not just because there's more people, but because of the nature of Canadians' diet, more concern for health, that kind of thing. And so lean protein plays a larger role in that context for a lot of people. And so that's been a good thing, because that helps, sort of prop up and keep the total demand for meat in the marketplace strong as the population grows, or as, maybe people consume a little bit less beef per capita, for example, maybe because of price, maybe because, they're concerned about their belief around cholesterol, that kind of thing. What we have seen that over time, the chicken has really been the only meat that has sustained year-over-year increases in per capita demand. And so, that in combination with the fact that it's a supply managed commodity means that the sector can sort of keep churning production to meet that. Everything else has been up and down or otherwise over the years on a per capita basis, but for the most part has been growing in total demand, because population increases have outpaced that per capita decline. The numbers basically for 2022 will be out sometime in May, but my math on, sort of the numbers of what we believe we've produced, how much we've imported, how much we've exported, et cetera, would suggest that we're up about 1% in 2022 on a per capita basis, after having declined about 2% in 2021. Again, I think that's a good thing, because again, is a reflection of relatively strong demand, not necessarily declining, and you'd layer that in with a growing population, and again, a population that has differing characteristics all the time and may have a greater demand in that context for lamb. It creates, I think, again, an enhanced opportunity for the sector, and in particular for individual producers. Like the US though, Canada, Ontario, we have imports in here in a really large way. And the sector has clearly, been able to manage in that context. But I think, again, like the United States, there's been a number of times where it's been difficult for us to sort of work within that framework. If you look at the Ontario numbers, we're importing over 100% of our lamb consumption, which means that we're moving product in, we're further processing it, in a boxed lamb kind of way, just like we have boxed beef. Cargill and Guelph doesn't just process beef from beef cattle produced in Ontario, they're buying a lot of USDA boxed beef. Same thing for lamb, they're bringing it in, they're doing further processing, and they're moving it across the country, which again is part of the nature of the way in which the Ontario market works, both in terms of our large consumer base, but also in terms of our large processing and distribution base. We do import a significant amount as a province from international sources. Obviously, Australia and New Zealand would be the two main ones. So this basically shows the total kilograms of imports of lamb and mutton into Ontario. Again, there'll be product move across Canada that comes in through Ontario ports. There'll also be circumstances where product comes in through the Port of Montreal and comes by rail or truck into Ontario. And that's not really, we're not able to account for that. We don't really have a good handle on that. But to give some context, in 2020, we imported about 14.7 million kilograms of lamb and mutton from various, destinations around the world, relatively even split between Australia and New Zealand. That number went up quite a bit in 2021 to almost 16 million kilograms, a fair bit more. The sort of shift, if you will, started to favor Australia in that example. And year to date this year, we're at about 14.2 million kilograms. So between the first 9 months of the year, we're already close to everything we'd imported in 2020. So the imports have increased. And again, I think that's a function of that, relatively stable per capita consumption, the growing population, a population that's eating more at home. That might favor lamb in a lot of respects, especially in some of the demographics that are relatively new to Canada, et cetera. And it may favor lamb from the perspective of cost relative to eating out, that kind of thing. And so I think, what this tells me is that, although we have seen increases in the imports from Australia and New Zealand, If you compare that to, say, the hog or the pork industries where we're exporting as well as importing, we've been able to manage this fairly well, I think, in the context of Ontario production, and carve out a fairly significant specific marketing channel. I don't want to call it a niche because I don't think it's niche. We've been able to carve out, I think, again, a pretty specific marketing channel for Ontario lamb, both in terms of major retailers as well as in the direct trade. So in terms of our ewe flock has grown since 2018, about 3%. That's the Canadian flock. Most of that is in Western Canada at about 13%. Again, there's been some big pushes through parts of the prairies. Through that time, the Ontario flock has declined about 2%. In a lot of ways, given the nature of what lamb production is, this distinction between a ewe and a breeding lamb or a replacement lamb, in some ways 2% is pretty much flat in my mind. It isn't a huge decline. 2022, however, was a little bit unique because our numbers actually grew by about 2%. However, at that same time, our replacement lambs fell. So again, what that's signaling is a few things, right? One is that we've transitioned some of our replacement lambs into the ewe side of things. So you're going to have a period of time where you've got a little bit more production there, but we've basically cycled out a number of our replacement lambs. And if you think about what that basically means you've got proportionally more lambs coming into the meat market, and so that at times can put downward pressure on prices as well, especially if like replacement lambs, you've got a seasonal nature to when they're normally marketed. And if that adds additional volumes to the market at those points in time. In terms of slaughter, again, Ontario is unique in the context of lamb because the majority of the lambs sold are sold through auction. The majority of those lambs are sold for slaughter through a live auction, direct to processor in a lot of cases. You don't, again, see that in other commodities. In the cattle sector, again, very few cattle get sold on a live basis, bought by packers. And so, I think one of the unique things in that context is that from the lamb side of it, you are getting an auction system that does give you a pretty good reflection of what the demand structure is from the slaughter plant's perspective. Again, when you're talking the beef industry, to contrast, because I know a lot of you will also be beef producers or at least have some perspective or context there, you're not getting the same market signals in the beef industry because you're not selling, especially in auction, to somebody who's intending to sell that animal on a live, as a processed animal. They're buying it from a different sort of quality or volume perspective. And so, that's, I think, a pretty big difference, and that reflects in a number of things. Again, in the lamb industry, provincial is it, right? It's about 98% of the slaughter is through provincial plants. Again, in the context of beef or pork, it's the other way around, really, when it comes to the beef or pork industry. And again, in terms of provincial slaughter for beef or for pork, the majority of the slaughter on the beef or pork side is done direct treaty from the farmer's perspective, so either the farmer's own consumption or selling it direct to consumer, whereas in lamb, a lot of the slaughter is done by a processor that has acquired the animal, they're owner of the animal, and they're planning to sell the meat. So it is a different business structure than on the cattle side. And so for me, anyways, as somebody that works a lot in the cattle industry, both in work and both personally, I always find the lamb industry quite interesting and a little bit different in that regard. Slaughter numbers for 2022 are up about 2% year to date. And so you're coming through a kind of a heavy time now, or that heavy time is starting to slow down a little bit. Interprovincial imports, which, are sort of a constant thing in the sector, you will have or hear of where, some sales in Ontario will have a large volume of lambs from Western Canada all of a sudden or more often than normal, and it'll kind of catch people's eye because you're taking your lambs in and you see these lambs from other areas of larger volumes, et cetera, coming through the ring. But there is no direct measurement to that number. It's not easily obtained. You can kind of rough out the math, which I do, and my suggestion would be that we're up about 2% in terms of those interprovincial imports compared to last year. But again, 2% is a relatively stable number. So I haven't seen anything that would really indicate major flows at really points in time or in total that would have had a pretty big impact on the market. Again, I talk a lot about the US, obviously. I try to reference back to beef in particular. But one of the things I think that's, again, unique and challenging about the lamb industry is that you don't have a futures market in the US like they do for corn, cattle, for hogs. And so the futures market basically gives us a lens into where the overall industry is seeing the prices for products going out over the next year or even two, depending on the commodity. And so in feeder cattle, in live cattle and hogs, it can give you a pretty good read on where things are going. And that futures market also then allows producers financial tools to be able to sort of manage their risk in the marketplace. You don't have that in lamb. However, because the US is such a large player, because we do have, even though maybe we don't trade a lot in terms of live product, we do have sort of unfettered market access to the US and vice versa. You can, and this is common in the sector, use reference prices. And you've heard me talk, with lamb, you can use reference prices in the US. The USDA uses St. Joseph, Missouri as sort of their key point. It used to be San Antonio, Texas. They don't really use it anymore. They're using St. Joseph, Missouri now. And again, one of the key things about that is that is a direct market for lamb. It's not a futures market. It's not a financial exchange. It's an actual auction market in the US where a large number of animals move through and where there's a large number of buyers, again, in this context of buying on a slaughter basis. And so it can provide a pretty good reference. And so what I do, and any one of you can do this, the information is available online. It's updated every week by the USDA and the National Ag Statistical Service, NASS. I basically tracked lamb prices in Ontario over time and compared that to the St. Joseph, Missouri lamb price. Now, again, with the US, you're converting it using the exchange rate. If you want to get really technical about it, you could add a transportation cost onto that yellow or orangish line there to kind of give you a feel for your up, above, or whatever the Ontario price. But, there is a pretty strong correlation between them. They do tend to move fairly closely. You do have periods of time where they diverge a little bit. And quite frankly, this last couple of quarters where the US price tanked quite significantly, the Ontario price did fall for a little bit, but not to the same extent the US price did. And so that, I think, is pretty significant from sort of understanding that. When you compare those two numbers, that's what we call as a spread or a basis. And generally speaking, when the price in your market is lower than the price in another market, you're considering that you are exporting. You have excess production. And the other way around, when you tend to be higher than that other market, when you convert that, that would tend to mean that you're importing, that you're a higher price market. And so in the case of lambs, we're pretty much universally, plus US. So we're in an import side of things. And even though we may not be importing lambs per se live, we are importing, mutton and lamb meat, and that's what that reflects. And so in addition to that, the one thing that's really useful about the basis, again, you can do it in a variety of different ways, but most people will do it once a week, base your reference point versus the reference price you would use here. And that'll also allow you to see seasonality. How does it change over time? And you can see on this graph that basically the numbers do vary quite a bit as the year goes by. The blue line is the 5-year average. And in most market analysts in all commodities, for the most part, use a 5-year average, your last 5 years, to kind of give you a gauge for where things have been. And that's usually a pretty good predictor if you're looking forward as to where that basis might be, excuse me, I tipped in my chair here, might be relative to those other markets. And then what you can do is you can track current markets. So the red line is 2021. And so what you can see here is that for the first part of 2021, we were plus that 5-year average. So we were stronger. So the Ontario price was even more above that US Missouri price than it normally would be. And as the year came through, as the summer happened, basically there's less lambs moving, you're on grass. will tend to come down to a zero. And then in 2021, we went into an export basis, which is pretty rare, which means we're actually lower than the US price, which again is a reflection of, in a normal circumstance, I would say, well, you've got a lot of excess lambs around. Now, that may not necessarily have been the case. It may be in the function of stocks and storage and processed frozen lamb on the part of processors. It's really quite hard to say given the nature of and the timing. But as you can see, you sort of had that seasonal come back up as you have that fall run. What we've seen in 2022 is we've been pretty close to that 5-year average for the most part. And so, what oftentimes gets kind of tricky is when, you're way off those 5-year averages and trying to identify some of those challenges on any given week. It could be that, well, yeah, there is a smaller number of lambs coming to market. A couple big producers had planned to market a bunch and chose not to. That can have a big impact on the market on any given week, especially in an auction system. So, all of these types of things, again, are just sort of there to help give you a feel for it. All of the stuff you can track yourself. So if you're, again, somebody who's buying lamb, so for example, when I used to buy cattle from auction for our business, now I do a direct trade with a couple of producers now, but when we used to buy them from auction, the basis I would do for our farm was off of that specific auction, because I wasn't going all over Ontario to buy stocker cattle. I was going to one specific auction. So I was watching auctions at certain points of the year to give me a feel for how that would line up with when I was planning to buy and what some of the things I would be looking for. And again, basis is always known after the fact. You never know basis beforehand. So this is really telling you where things have been and where they've been over time. And then you kind of got to go with what's going on in the market. And when you walk into an auction, it's one thing to be walking in and you delivered all your lambs for sale and you walk upstairs and you sit and watch everybody as they go to business bidding on the lambs. You're going in to bid yourself, then it's a different thing. It's like reading the poker table. You're trying to figure out who's there, what their interests are, what they're going to bid on, that kind of stuff. And some of your decisions may play into that. So what's the market outlook look like? So what I typically do for lambs is I would take some of those earlier numbers from the USDA and I would kind of map them over the next year. And I would throw two different sort of basis levels against them. So, one is the U.S. has been dealing with supply adjustments, which means that, no matter what they predict, whether they predict stable prices over the next year, it's likely that they have some volatility in their market. If all of a sudden and going into January, February, March, imports from New Zealand, Australia tank, I don't know, maybe there's bad weather, maybe they're not able to get product in, that can really jump up the price in Missouri because people are thinking, oh, we don't have enough lamb around. And so again, it's sort of that context. So I would expect that kind of is the case for the next couple of quarters in the US is like corn, you may have some more volatility that you don't normally have. But if you sort of project that forward, our base is usually highest in the first quarter, flattens a bit in quarter two, and then falls by about 50% as you go into the fall, the Q3 and Q4. And so if you take that through, that's basically the red line. And that takes you anywhere from around 330 at the start of 2023 down to some lows towards September or so, and then back up a little bit higher at around 280 in the end of the quarter in 2023. Now, again, that's based on a 5-year average. And throughout 2022, we've been pretty close to that 5-year average. So, in that context, it maybe fits fairly well. However, if you look at 2021, we were almost never, other than maybe in the very middle of the summer, we were never really at that average. So again, you kind of have to make some adjustments. And so in this case, I've said, well, what if the current basis level continues? In this case, actually, there's a fair bit of strength there, as I mentioned, and that would mean probably less volatility in the Canadian market through the year. I don't really believe that will be the case. The seasonality almost always comes back at some level. So you'd expect that blue line to dip. Now, maybe the blue line doesn't dip all the way to the red line, but it's likely to dip through that period because that's kind of the normal because of the nature of what we've got. Really dry summer, you can speed that up a bit because you've got lambs coming to market or, in an earlier sense than we might normally, that kind of thing. But again, I think in general, this is a relatively strong set of numbers as far as where I would see things going over the next year. Is it some of the levels we've seen back into 2021? No. Those were really, really high. And, the same with the beef industry. There was periods through 2014 and 15 where, you're getting 3 years worth of income from a steer in a sort of historical context. Does it mean we won't see those kind of prices? And that's always possible. There's a variety of factors that play locally that could contribute to that on any given week, if you will. But from my perspective, I don't know that the market sort of fundamentals, if you will, are there to do that. In terms of the returns, I tend to use a reference of, based on the cost of livestock and feed, about $145 to feed a lamb. Again, everybody's different. And I think one of the key things about the business side of any industry, this in particular, because you've got a heavy grazing base and because a lot of people are doing direct trade, really understanding your costs of production are really, really important, and having a handle on that and how that changes as you change your marketing, for example, again, going direct to consumer versus through auction, et cetera. But the number I use as a reference is about $145 a lamb. And so through the year, at a 75-pound lamb basis, you're getting a reasonably strong return historically. But again, that's still covering your overhead, that's still covering your land costs and your return to your own time and labor. So again, these are not super high numbers. They're not numbers that, without some volume, you're able to sustain a reasonable overall farm net income. But again, historically, the numbers are, compared to historical, the numbers aren't too bad. And so, as I mentioned, we've kind of followed the US in a variety of ways. I think we've had the ability to manage imports in a more sustained way as a sector. And I think, again, it has to do with this sort of carving out of a more defined marketing channel for Ontario and Canadian lamb, which again, I think is a big benefit for us. Obviously, our provincial plants are a significant player. And again, that relationship back to the auction system is very unique. It's not well understood in my view from the perspective of people seeing how it's unique and why it's unique, but it is unique. And I do think it often gives a pretty good, a more defined lens into where the market is than some of the other commodities. Again, I think despite some of the price declines in the US, we should expect reasonable strength here over the next year or so. And again, I think that, like anything, but certainly the way things have went from the cost side of, point of view, fertilizers, it hasn't really went up a ton in the last month or two, it went up obviously last year a lot, but, it's not necessarily going down either anytime soon. So cost control is going to continue to be key. So that's why, again, hopefully you guys have an opportunity to work on some of those concepts. I know John Mullenhuis presented to you about cost of production today, as I understand it. Again, he's a wealth of knowledge in terms of referencing that kind of information. And so I really encourage you to dig into that. It's not easy. Not everybody's into the numbers that kind of way. But the better you get at it, I think, in my experience, the better you can manage this type of stuff. So with that, I will stop there and open it up for any questions.
Great, Steve. Thanks for that. Folks, surely we have some questions. There must be some things that you've seen or heard tonight that maybe you want a more in-depth explanation of, or you have something that you want to post back to Steve on that. So wanting to speak live, raise your hand and I will acknowledge you and have you unmute your mic. For others, type in the chat box and I will monitor that. Sam, I see you have your hand up. If you want to unmute your mic, please.
Yes. Hi, Anita. Thank you.
Yep.
Steve, I have a question for you. I
Sure.
I have a small flock.
Yep.
My flock ranges between 150 ewes and 200 ewes.
Okay.
So I'm not obviously on the high end. I'm in the top 17 percentile according to Stats Canada. So it makes me a pretty large producer. Most producers, in my opinion, I'm just setting up the background for you because then I have a question. And my question strictly relates to the small guys, of which I am one of.
Okay.
So according to basically your presentation plus StatsCan and so forth, about 70% of the lambs come into Ontario. About 30% of our lambs, we deal, that's our market share.
Yep.
So it's a 70-30, 70 comes in, 30 we produce percentage-wise. From a board source, about 80% of that 30% is by producers with processor deals. So that's about 24% is off the table for myself. So the 70% is off the table because I'm not an importer. The 24% is off the table, which I don't have a processor deal. So that leaves myself and a super majority of the 2,500 flocks in Ontario fighting over 6%. Now that 6% market share is extremely volatile in that we primarily take our lambs to the auction houses, and you just don't know. We went, I'll give you an example. We went to the Ottawa auction house one day, and an hour before somebody dropped just over 1,000 lambs, and our day was gone. So my question is I see all your numbers, and even cost-wise, we're actually below your $145. What does the 6%? What does the future look like for the 6%ers? See, our prices are extremely volatile.
Yes.
In fact, as volatile as they can be. We just go to the house, and it is what it is.
Yeah, well, I'll be honest with you. Again, auctions in any industry are extremely volatile. That unfortunately can be the nature of auctions. I think that, as you pointed out, there are relationships in the industry where producers have a direct relationship with a processor. Some of that still ends up in auction. Some of it doesn't. Some of those relationships aren't always easy, and some of those relationships still have volatility in them, just a sort of a more controlled volatility, because you're kind of negotiating it as opposed to, on a Tuesday afternoon, you get to experience it all within an hour. The future, I think, from my perspective, and again, I may be a little bit biased because, again, I'm somebody that, I sell quite a bit of direct consumer beef. That's all we do. We've dabbled in the feedlot industry quite a bit in the last couple of years. I'm not sure how long we're going to stay in it, but we're basically doing direct to consumer. For me anyways, that's been the recipe for dealing with some of the volatility that comes from an auction system. Again, I don't want to be super critical of the auctions because I don't necessarily see the volatility as a criticism. It's kind of the reality of that type of industry. But the direct to consumer trade or the direct treaty with another producer or packer can add a degree of stability for anybody, including smaller producers. The question, I guess, becomes how that fits into your business model. And generally speaking, if you're a smaller producer, for the most part, in my experience, you've also got other things going on with you in terms of your farm business or your family business that affects, sort of that side of things. So again, I think the future is actually pretty good because I think the demand is there, but to think that you're not going to have volatility in the auction market, that's not going to happen. It's going to be there. So I think the smaller guys, again, and I think the bigger guys have taken some steps in some cases to mitigate some of that. The small guys can do the same. The question is, does it fit in with your business model and your family model? Which again, my experience is that the cow-calf industry and the lamb industry have a little bit more intrinsic tie to people's family and family businesses, maybe than somebody who's a 5,000 acre cash crop farm. So, I think that it's hard to answer that question without sort of understanding that side of your family or business.
Yeah, I can tell you, Steve, my the question I've been pondering. We've procured money for a larger sheep barn,
Okay.
but we are extremely reluctant, and we've started selling into the replacement ewe market and some rams and things like that, which has a higher margin. But sinking $500,000 in a new barn to hope to try to get into a producer deal, that's a pretty big risk.
But for sure.
More importantly, here's where we are today. If we just sold hay, we would probably double our revenue, and that's where we're at today. And I don't have to tell you, we're doing the hay anyway. And so I'm just wondering, is our lambs, pardon me, ever going to come back to a level where, they'll double in price, which is easily where they should be if you look at food costs. So for example, looking at your chart that you presented before, I think you were selling Ontario lamb at $52 or so per kilogram. We're getting about $4 per kilogram, somewhere in between that $4 and that $52. Is something that's not right. And I'm just wondering who looks at stuff like that.
Well, we look at it. I guess the question, becomes is what's sort of the driving force behind why it is at a level it is, and do we see it coming back? I think you'll see some strength in the market. I don't know that you'll see a doubling of prices, because I'm not sure. Like, in some respects, those prices were pretty extraordinary. So again, I think that, from the perspective of opportunity, to your point about building a barn, expanding outside of it, the challenge of the direct relationship, whether again it's selling meat, whether it's selling breeding stock, etc., is you can get a higher price, but the cost and the challenge of securing the market is difficult. It's more difficult, right? Like, so again, like using my own example, the work required to sell all the beef we sell is a lot more than me just running those cattle to auction, but it garners me the potential for a higher return. And so on one hand, I don't have the price volatility, but I have more worry and volatility in terms of in terms of the demand for my product every year. And that can be its own headache and challenge, right? So unfortunately, I don't necessarily have a perfect answer for you in that regard, but I do think that the lamb industry, especially on the direct side, has continued opportunity, continued strength if you can sort of find your way through that demand.
Okay, that's really all I have, Steve. I hope you're right, by the way. We started in the sheep business about 6 or 7 years ago. And I think between then and now, we've lost about 800 flocks based on the last email that I got from OSF and the last Canadian government.
Well, there's certainly a lot. There's certainly a lot fewer, and I think that, unfortunately, in a grazing industry, in an industry where you do have a lot of smaller producers in areas, there's a lot more to the loss in lamb flocks or ewe flocks than just the price of used. You know what I mean?
Oh yeah, I know what you mean.
And that's the same. You take a drive north to Guelph sometime and do that over the last 20 years. The amount of beef cattle that are now corn, and when you go up through there is pretty profound, right? And lambs in that mix. So one of the points by Shayla Finn is around the cost. I use it for my own math, an estimate of $145 a lamb in terms of the cost of basically feeding that animal, the cost of basically breeding out an animal and feeding it through. That's my estimate. Is it a perfect cost? No, it's just kind of a rough number that I use, and I will tend to use it for the market outlooks.
Yeah, sorry, go ahead.
Sorry, Sam. So, Steve, to that $145, that's feed costs, right? That's not any other additional operating costs.
No, you still got to pay for overhead. And we call it a feeding margin, right? We do the same. You can go on our ministry stats site. We have one that we keep up to date weekly for beef cattle and for fat cattle and for market hogs. And the idea is so that then you can play your own fixed costs and that kind of thing against that. You know what I mean? To see kind of where you fit. A lot of times those feed costs are somewhat universal. You know what I mean? They're not, people don't vary that much, you know. Lamb's a little bit trickier because you're dealing with a lot of grazing. It's a lot harder to come up with an exact number. You have a lot of sort of non-cash costs. John would have talked about that probably in the COP discussion today.
Mhm. Sam, you had a bit more to add?
No, that's okay. I think, you know,
Right.
I've got my time's worth.
Okay.
Thank you.
Thank
Thanks,
you.
Steve.
Yeah.
Appreciate
You're
it.
welcome.
So Sheila, I'm assuming with Steve's comments with regarding to your $145 query in the chat box that he's answered your question. If not, feel free to unmute your mic, and
I'm unmuted, Anita.
I see
I
that.
also asked, based on all the charts that he showed, the early ones were showing what the Missouri price was for lamb was going to be $143 in 2023. Is that 143 US or is that 143 Canadian, or what is he projecting
So here's
based
the
on all his information that I would
projections.
get at Cookstown the end of June?
So here's the projections right here, slide 22.
Yep.
And so basically, again, this is, you know, based on where the US looks to be going and where sort of we normally are at that time of year. So if you're talking the middle of June, basically you're talking the middle of the year, you know, probably anywhere between, you know, 3 and 270 kind of thing, Canadian.
Per pound.
Yeah.
Yeah. Per
Again,
100. Per 100.
Every auction, like, again, my experience is that this kind of works not too bad, you know, but every auction, again, I've sold a lot of auctions, like, you know, things can be way different depending on the day. That's the challenge, but
So if
I think it gives you a guide.
If I've understood you correctly, a guide from a budget point of view, one could project $2.50 a pound the end of June for a 75-pound lamb.
Yep, I think that would be pretty reasonable, yes.
Thank you, sir.
You're welcome.
Thanks, Sheila, for the question. Other folks don't get this opportunity very often, so feel free to pick Steve's brain. All right. I thought we'd maybe have a few more. Steve, I'm just reviewing the notes that I took when you were talking. You had a slide, and this is more just to clarify for other folks, but
Yep.
I believe this was with the retail grocery prices, and it was you had 3 types of lamb on there: live lamb, processing, and retail.
Yep. Oh, right here, you mean?
Yeah.
Yeah.
So for those that may not know, what's the difference between retail lamb and processing lamb?
That is a little bit of a tricky one. So retail lamb is effectively what would be measured in grocery stores.
Yep.
Processing lamb is a measure of what a wholesaler would be selling, or a processor.
Exactly.
And again, and that's a little of a bit of a tricky definition, right?
Yeah.
What they would be selling. And again, this is an index, so this is only showing variation. You know what I mean? So the idea here is to say, well, which ones look more volatile? When are they volatile compared to the other one? So on and so forth. And again, as an individual producer, again, if you were, you know, back to my point about the direct treaty, whether it's direct treaty with a packer or whether you're selling direct yourself, you know, you can set up these numbers a little bit yourself based on the markets you're in and track them over time, and it can help give you a similar kind of guide to this, right? It does work. You know, as an example, I will often, you know, because our farm is near Colborne, I will often look at farmers markets in the area, and every once in a while I go to a farmer's market and see what local guys are selling beef for, as an example, right?
Right.
And it can give you a tool to then see where you fit, right? That is a really good view in my mind, and it works. It really does.
Yep. Okay. Last call, folks. Sam, go ahead.
Steve,
Yep.
how do we combat imports?
Well, the main way you combat imports, and again, it's a tricky one, right? Because it's difficult for you as an individual producer to see how you can combat imports. But, the reality is that growing the demand and the knowledge of the freshness, the quality, and the local nature of what Ontario lamb is, that's how you combat imports, right? And so again, what's I think is quite unique in a lot of ways in the lamb industry, again, is this idea that the majority of lamb that's processed is processed by provincial plants, right? It's different than cattle. Like Cargill, right, is an international company. They could stop processing Ontario cattle tomorrow and have all U.S. box beef if they wanted to.
Yeah.
So what's unique about Ontario and lamb is there's this market channel. And again, I'm not saying it's easy to move the needle, because it isn't, but you have an industry that is basically tied into the retail sector in a way that, as you have a lot of new Canadians who consume lamb, they see the value of Ontario lamb, Foodland, that kind of thing. That's how you what we call displace imports, right? And at the local level, every producer that sells direct starts to dig into that as well. Again, is it measurable in a way that shows major change? No. But, it does dig into that, right? And so I think that's kind of how, as an industry, you want to look at it, is, again, but if your goal is to say, well, we can clearly see this massive displacement, that's not an easy thing, so I don't want to oversell what that can be, but I do think that there continues to be a fair bit of opportunity there. And again, in the process, you're supporting local processors. There's a lot of benefits to local communities from lamb too in that regard, right?
I agree. It just doesn't seem to be working. So I was wondering, if let's say you're a new hire in OSF and you would like your membership to increase instead of decrease, what would be the top 3 things that person might tackle, like real strict projects, actual projects? I was just
well, in my opinion, and I kind of alluded to this before, and if you've heard me speak at beef meetings, I talk about this quite a bit. And again, I'm a little bit biased, but in my view, the sheep and the lamb sheep and the cow-calf industry, or even just like the background industry in Ontario, they have a real opportunity, in my opinion, to attract new producers from other walks of life, from new immigrants, that kind of thing, and take advantage of parts of Ontario where the land is a little bit unutilized. If you take, say, north of Belleville, there's a lot of farmland up there that isn't being used, right? That is relatively well suited for those two industries. Again, is it likely to support a family on its own? No. You're going to need to be somebody that's a mechanic working in Belleville in that example and got a lamb flock. You know what I mean? But quite honestly,
I'm south of Belleville, by the way, so I know
right.
what you.
But do you get what I'm saying, though, right? So, in my opinion, there's a big opportunity in central, eastern, and northern Ontario in the beef and sheep industry to do that. But it can't just be about lamb production, in my opinion. It has to be, you have a family, you have an off-farm income, you want to be part of agriculture, you want to own rural land, you want to, there are opportunities to buy land that's maybe not as valuable, but it will support a certain type of agriculture, and this is one of them. And in turn, those people, again, in my view, and because I've lived it, it sets yourself up for this direct to consumer. And I think in ways that's a little bit different than somebody that's expecting to have 5,000 head because they're going to do this in a highly commercial way. It's a different business model. You know what I mean?
Yeah.
I think that's a real opportunity for both sectors. Is it the only one? No. But I think when specific to your question in terms of membership, people doing it, I personally think it's your best option.
Okay. Thank you.
You're welcome.
Excellent question, Sam. Right, Steve, thank you so much again for bringing the depth of knowledge and experience to this talk. I mean, you know, we could have certainly sat here tonight and talked land prices and imports and exports, but I think you bring in the perspective as to how other aspects of our agricultural industry and the US impact on what happens here. You know, paints the picture a little clearer. It's never clear, but it does help paint it a little bit clearer. So on behalf of everyone on the call tonight and on behalf of Ontario Sheep Farmers, thanks so much, Steve.